This is the building where dollars pour in from around the world to make money for companies, the Johannesburg Stock Exchange in Sandton, in the heart of one of the richest square miles in Africa. In this building, 400 listed companies have made over 70 million trades worth billions of rands last year alone. The lady at the helm of this trillion-rand stock exchange, Nicky Newton-King, has been its chief executive for almost 7 years. There have been tough years in unpredictable markets.
It was a hard year all round in South Africa last year. You could see the all share off considerably, and that makes it a very difficult environment for investors. It was a year in which we were navigating as a country through the beginning stages of feeling quite positive about momentum, and I think eventually recognizing that it's actually a lot harder to get real traction on growth, particularly inclusive growth, than perhaps one's initial sense of optimism held true. And we saw that pain track through the year.
There was a time when the JSE was famous for winning world awards for the best run stock exchange. In recent years, this crown has slipped.
I've got a problem now, and again, I'm opening my mouth. I think having been on the market for 47 years, I sat on the stock exchange committee for about 6 years, and I think when we weren't a public company and we were still run by a committee, I think one of the benefits is that we were all practitioners. We were practitioners on the market. We understood the market. And therefore, when it came to governing the stock exchange, we had a much better knowledge. Today, you've got professional administrators. And perhaps one of the problems is that the people on the executive or on the stock exchange committee have never really bought and sold shares or sat here at the desk here trying to work out what the market's going to do today, and starting to pick up things on the screen which sometimes need attention.
The regulatory slip-ups over Steinhoff in 2017 cost the JSE a bit of credibility and threw it open to question. David Shapiro, a veteran South African stockbroker, explains what he thinks the JSE's problem is. Last year.
I don't know if it's a JSE issue. I battle with that, whether it's I don't want to be too critical of the JSE. I think that in Steinhoff's case, I think the investment public had a lot to do with that as well. From my point of view, and I don't want to act holier than thou, I could never get a grip on what Marcus Jooste was doing. It's just from a person who's been in the market for a long time, whenever I try to go through his results, I became confused to a point where I said, it's too difficult for me, I'm leaving it. I'm leaving it. I think governance also is around the table, and that's where we've been let down, not by the stock exchange, but by the boards themselves, where I think you have to exercise a much harder duty of care and diligence if you're a non-exec director. To be honest, I'm not a great believer in the King codes. I don't believe in non-executive directors because I question, and I'm generalizing, and I could come under a lot of criticism for what I'm saying, but I think that when you accept a post as a non-executive director, you have to apply your mind in the same way as an executive director. In most cases, executive directors are working every day and they're apprised with what's happening, whereas a non-executive director gets a pack which you look at and go to a meeting for which you have to be very, very well prepared. So therefore, you want to be a non-executive, you've got to be as diligent as an executive. And I don't think people exercise that same kind of judgment.
Even with negative returns of over 12% last year, Shapiro doesn't put the blame solely on the JSE's leadership.
There's structural issues why we lost 12%. A lot of it was Naspers. Naspers came down, and that was worries about growth in China and also about their gaming side, which I think has been overdone. We're going to see a complete reversal of that this year. Naspers is a stock that I think you must watch very carefully. I think it's going to do pretty well. I would back Tencent. So I think that was one of the issues. And then we were let down by a lot of companies. Right. I can start with from Aspen. the Mediclinics, a lot of smaller caps like Blue Label, British American Tobacco, AB InBev, all of those had dreadful years, Tiger Brands, and these are influential businesses. So it was a mixture of economic conditions and also perhaps, I don't want to call it poor management, but management let us down. They never quite fulfilled what the market had expected of them. So I just name a few shares. A lot of former favorites like Curo came down. So there was a long list of local businesses that fell in the region of between 25 to 40%, some of them even more. So against that backdrop, it was very, very difficult for the JSE to perform. The ones that did do well were the ones that we didn't expect to do well. Anglo-Platts, Anglo-American, BHP Billiton, even Anglo-Gold came towards the end. They weren't exactly choice picks at the beginning of 2018.
Meanwhile, competition is in the air. New stock exchanges are springing up in the JSE's backyard. A2X is one of 3 competing with the JSE for business. The biggest player on the block appears sanguine about this new competition.
Yeah, competition is hugely exciting, actually. So we're 131 years old. We've actually been competing for all of my only 23 years at the JSE with international markets and the like. This is the first time in the last 3 years that there are actually other exchanges with in the country, bricks and mortar exchanges in the country. It does change the temperature of competition a bit, and we found it incredibly, as I say, exciting, but also really good for our business model.
As a sign of who's still in charge, the JSE had 12 new listings valued at over 107 billion rand last year. One of them was Exemplar, a 36-year-old family-run business that owns shopping centres across South Africa.
Tell me about the strategy to have malls in specific previously disadvantaged neighborhoods or areas, townships, if you call them that.
It was a stroke of genius. It was my dad. 36 years ago now, he founded the company after he'd been working for World Furnitures and had been doing, he was development manager there and had been doing standalone furniture stores in areas close to where the majority of South Africans were living, and realized that a lot of people had to travel huge distances to buy basic groceries. And he decided that this was an opportunity, not only for him to start his own business, but also to make a meaningful change in South Africa.
This is one of them in Alexandra in Johannesburg. It has 29,565 square meters of retail space. It was the only real estate fund to list on the exchange last year. Exemplar couldn't have chosen a more difficult time. The South African Property Index fell over 31% in 2018. CEO Jason McCormick was the man who took the plunge.
In terms of 2018 was an incredibly tough year for the property market, no doubt about it. For us to have listed in probably the worst time in the property market in the last 20 years, was something that very few people expected. But because we weren't doing a capital raise, we weren't placing shares and looking for money, it was really about putting ourselves in a position that we could access capital markets when we needed to. And with the pipeline that we've got, the pipeline of developments that we've got, and with our ability to do acquisitions, there's definitely going to be a need for us to access the capital markets.
How their shareholding has changed as a result of listing now?
It hasn't, unfortunately, and this is one of the things we're working on, because in a lot of the local community trusts that are shareholders in the shopping centres, there was a condition in the lease or in the title deed that they couldn't sell their shareholding without the permission of the minister. And so until such time as we get the minister's permission for them to swap up, which is effectively selling, they remain outside the listed entity and in the shopping centres themselves. So the growth prospects inside the listed entity are far greater than in the shopping centre itself, especially if you look at today's escalation rates on the leases, where there's a lot of pushback from the national retailers. So that's one of the tasks for this year, is now getting the government's permission to bring the communities into the listed entity with us.
If you could, would you have changed the timing of when you listed on the JSE?
No. Because it hasn't affected us. We're still trading. We listed at 10, we're trading at 10.40 at the moment. And the pipeline isn't moving further away. As I said, we've got We've got about 10 billion worth of development in our own pipeline, plus a lot of acquisitions that we're looking at. And there came a time that we needed to make the call. And we always call ourselves a great little company, but things had changed. You know, when I joined the company, I was employee number 9. You know, with shares in 6 small little shopping centres. In the listed fund now, there's 20. In the fund, I think we were 5 outside the fund, 3 under development, another 4 that should be starting this year. 50 odd employees at head office, plus about another 60 out in the field. So it's not the same company as it always was. And there came a time we needed to step up to the next level. And certainly the advantages of the, as I've mentioned, the fiscal discipline, the better financing, access to the capital markets, being able to raise capital and really push this pipeline through is something that we couldn't wait for any longer.
Doubts over the biggest exchange in Africa are likely to persist in 2019, a year that threatens to be one of the toughest for business in more than a decade.
We never really give forecasts on the year ahead. But if you look at what we're facing as a country, we've got an election in the second quarter of the year. The date's still to be determined. That always brings with it a fair amount of noise, often at the more extreme ends of the rhetoric than we're even used to during the course of an ordinary year. And that makes it quite a tricky space for investors to navigate. So we are going to face that as a country. Of course, internationally, you've got Brexit, you've got what's happening in the US being very big, having very big impacts on us as a country as well. We are aiming to implement a whole lot of new projects and products that will make it easier for our clients to do business with us. And so we're very clear about how we will navigate that year as the JSE, very clear about the fact that as we do that, we need to balance our responsibility to the broader society, and so therefore looking also at the pitch of our regulatory standards, given all the noise from a regulatory perspective last year, looking at the pricing of what we're doing and continuing to trend that down, looking at the services that we offer and continuing to trend the service levels up. Because if you put the clients at the center of what you do, it actually really does help you focus on turning the dial in the right way to make what we do better for our stakeholders.
But Newton-King doesn't seem to be fazed by what is likely to be a Herculean task to steer the Johannesburg Stock Exchange towards positive territory. Kopanogumbi, Johannesburg.